The top business stories live from the Sky News City studio. Prices fall at the fastest annual rate since 2009, according to the Halifax. The US oil and gas giant ExxonMobil is in talks to buy US shale pioneer in a potential blockbuster deal. Plus, why the resorts giant behind Legoland and Madame Tussauds is moving into augmented reality games. I'll be speaking with Merlin's chief executive. Good morning. This is Business Live with me, Ian King. House prices have fallen for the sixth consecutive month, according to the Halifax. It means that annual prices fell at the fastest rate since 2009 in the year to September, but there are signs that the pace of decline is slowing. Well, properties prices fell by 0.4% in September on a month-on-month basis, representing a slowdown in the pace of decline from August's fall of 1.8%. On a year-on-year basis, though, prices fell by 4.7%, representing the biggest year-on-year decrease since August 2009. The average home now costs £278,601. Well, joining me now is Tom Bill. He's head of UK residential research at the real estate consultancy Knight Frank. Tom, welcome to you. The pace of decline has slowed. Does that reflect the Bank of England hitting the pause button last month on interest rates?
I think it perhaps to some extent. I think overall, yes, sentiment has been knocked by these 14 consecutive rate rises. It was knocked initially by the mini budget and the fact that there is more financial pain that takes a while to drip into the system. All that takes a while to wash through. Nothing tends to happen that quickly in the housing market. So I think we're noticing it already. People are starting to look again as the autumn market gets underway. And we think going forward, sentiment is going to be the key really next year. I don't think we're going to suddenly have a housing market firing on all cylinders, but we're not going to have a repeat of 2023, where I think this has been the year where I think most of the pain has happened in terms of the house price correction.
And interesting you say that, because, I mean, mortgage approvals in August were down 37% year on year. I mean, that potentially points to a sort of a dampening of activity in months to come.
Absolutely, yeah. The market is operating well below capacity at the moment. I think it's certainly been the case that people have just pulled back amidst so much volatility in the market and so much uncertainty. I think that sense of certainty is perhaps now starting to creep back. There's no light at the end of the tunnel quite yet, but perhaps it's a flicker that people can detect. And I think going through to next year, I think you'll have more economic stability. What you may also have, of course, is election fever beginning to ramp up a bit, and that tends to suppress demand, and certainly in the run-up to elections. So I don't think for any sort of length of time yet, certainly for the next 18 months, we're going to be in positive territory by any means for house prices.
What about the regional picture, Tom? I was quite struck. The Halifax has London falling at the most rapid rate year on year, whereas the Nationwide the other day had the West Country suffering the biggest year on year declines.
Most of the declines, Ian, that's right, have certainly been in the south of the country. I think the southwest is probably coming down from the highs of the pandemic when everyone was looking for more space and more greenery. And I think what's happening in London and the southeast, we're almost picking up on a trend that began before the pandemic, which was really driven by affordability. People were leaving the capital in growing numbers, getting more bang for their buck in the housing market, accelerated by the race for space. The race for space is still there, but it's winding down. And what we're seeing now, I think, is there's work-life patterns, new work-life patterns establish themselves. People are sort of gravitating again out of more expensive locations, and that affordability squeeze that's been in the capital is starting to come to the fore again. And I think that's going to continue over the next couple of years. The rest of the country is playing a very slow game of catch-up with the capital in terms of house prices.
Tom, while we have you, obviously the Prime Minister pulled the plug on the second phase of HS2 earlier this year. What's been happening to house prices along the first phase of HS2? Where they're not been blighted by the railway line being built, has there been an uplift in prices?
I haven't seen probably enough in specific detail of what's been going on, particularly along the line. I'd say just as a general point, though, away from London, I think the conditions are in place for sort of stronger house price growth around the regions. We have a country of tens of thousands of individual housing markets, and of course you will see individual patterns and individual supply and demand drivers shape markets in their own way. But in broad terms, away from the capital, I think is where we're going to see stronger growth as sectors of the economy like electric car manufacturing and logistics and biosciences start to really sort of perform more strongly post-COVID, and those are the sort of areas of the economy focused away from London.
OK, Tom, got to leave it there. Appreciate you joining me today. Thank you.
Pleasure.
Some other business news stories for you now. And the US oil and gas giant ExxonMobil is in talks to buy Pioneer Natural Resources, one of the biggest players in the US shale industry. The deal could value Pioneer, the third largest player in the oil-rich Permian Basin of West Texas and New Mexico, at as much as $60 billion. That would top the last blockbuster deal in the US oil industry, in which Occidental Petroleum paid $38 billion for Anadarko Petroleum in 2019. Shell said this morning that earnings in the 3 months to the end of September would be up on the same period last year, thanks to a stronger performance in gas and chemical trading. Shell also said it expects to report production of 880,000 to 920,000 oil equivalent barrels of gas a day of gas production for the quarter, in line with what it had forecast, but down from the 924,000 barrels a day it produced in the same period last year. Liquefied natural gas in the quarter is also expected to be marginally higher. The shares are currently ahead by 0.5%. And the pub operator JD Wetherspoon has returned to profit after 3 years of COVID-related losses. The company, which trades from 826 pubs, reported a pre-tax profit of £42.6 million for the year to the end of July. That was up from a loss of £30.4 million in the previous 12 months. Tim Martin, the founder and chairman, said that in the 9 weeks since then, like-for-like sales, which is the measure of sales that strips out the impact of new openings or refurbishments, were up 9.9% on a year ago. And Merlin Entertainments, the resorts giant behind Legoland, the London Eye, Sea Life and Madame Tussauds, is to launch augmented reality games based on hit TV shows like Paw Patrol and Squid Game at its attractions. It follows a licensing agreement with Immersive Gamebox, the immersive group gaming platform founded by Will Dean, the entrepreneur behind the obstacle course business Tough Mudder. Well, Merlin, which is the second largest attractions company worldwide after Disney, plans to open the first Gamebox locations before the end of the year. I've been speaking to Scott O'Neill, Merlin's chief executive, and began by asking him how the partnership had come about.
When you look at the marketplace, you've got 3 billion gamers around the world. And when you marry that with the incredible tech of Immersive Gamebox and their IP with brands like Squid Games, you look like a Squid Games fan to me, Ghostbusters, Paw Patrol, you effectively take people out from their couches and you bring them into an immersive experience where they can interact with their friends and family. And that dovetails really nicely with our cluster strategy in our gateway cities.
What made you want to partner with someone rather than developing this kind of activity and attraction yourself?
You know, I found over time and over my career that there's something really special about entrepreneurs. And Will Dean is one of the founders of Immersive Gamebox, and he is a brilliant strategist, operator, and has a world-class team. And I think when you can partner with world-class partners, you get to market a lot quicker and oftentimes a lot more effectively.
How rapidly can you roll out these interactive games rooms?
Well, you know, that's the one advantage of having scale. This is how we do business at Merlin. We like to test and try. We have one going in Germany and one in Australia, and we'll probably know in the next 6 months kind of how the trials are going. I'm assuming they're going very well. As if you look at their examples of their sites, I'm sitting in one now in Shoreditch in London, and I think we'll go very quickly.
Do you think appetite for different types of interactive game are going to vary from territory to territory?
You know, there's some IP that's a bit ubiquitous, you know, and we found that with Madame Tussauds, and we found that with Sea Life Center. We found that certainly with Legoland, that when you have IP like Squid Games and Ghostbusters and Paw Patrol, you've got a pretty good global audience. And so will there be nuances market to market? Of course, you know, and I think we'll find that over time. The good news about a product like this is you can continue to innovate and iterate. And so at a touch of a button, you can add a new game. and they're operating with their brands about a new game every 3 months for each of their brands. It's a pretty amazing system.
And will visitors be charged separately for these interactive games rooms, or is it part of the overall entry price?
No, this is a separate attraction. So yes, you pay in 30-minute increments, and you can come in with as much as 6 people into these boxes. I was playing them most of this morning, and unfortunately not very well. But it's an incredible experience, and I'd love to see you in one of these boxes, doing a little red light, green light, and Squid Games with me.
Could you see yourself eventually buying out Immersive Gamebox?
You know, I never talk about deals in the future. I'm only focused on what we're here to talk about today. But man, what an incredible use of technology, melding of brands, and really talented management team.
And more broadly, tell me about your wider expansion plans. I gather there's a big Peppa Pig park due to be opening in Germany soon.
There sure is. There's a Peppa Pig park in Germany, and one we're going to build in Dallas. That's a wonderful brand of ours. Legoland continues to be an incredible business. Lego, as you know, is one of the top brands in the world. They're wonderful partners. We have 3 new parks coming, one in Shanghai, one in Shenzhen, and one in Sichuan. Those are enormous resorts. And then, of course, our Midway expansion continues to double down in the 10 most important cities in the world.
Obviously, there's a lot of talk in the broader travel and tourism industry about so-called revenge tourism post the lockdowns. Do you think that's still got further to go?
You know, it's a really fascinating time. You know, we had a really good first half of the year, and off a record year in 22. There's certainly a shifting in consumer demand and consumer behavior that's shifting market to market. Our focus, though, is out on the horizon. You know, we know coming out of COVID, like, the world changed. You know, we became from an economy of things to economy of experiences, and that's where our tailwinds come from. People want to be together. They want to make memories. They want to have happiness and spread and bring joy, and that's what we do for a living.
And how are you managing with the inflationary headwinds just now?
You know, there's a ton of pressure, you know, in particular on the cost side. And we're kind of going through our budget process right now to figure out how we're going to tackle some of them. I think we're all, you know, all of us in the business community are facing very similar headwinds.
But do you make the assumption that certainly in the United States and in Europe, we're now past the worst in terms of inflation?
You know, it seems to be leveling out. So I hope we're past the worst. It's just about how long we're going to be where we are.
Brilliant. Scott, lovely to talk to you today. It's a real pleasure. Thank you.
Ian, thanks for your time. I look forward to talking to you again soon.
Hopefully see you in person one of these days.
You bet.
Now, Istanbul Airport has been Europe's busiest airport for the last 3 years, leapfrogging the likes of Heathrow in London, Charles de Gaulle in Paris and Schiphol in Amsterdam. But its ambitions go further than that. It's targeting 100 million passengers a year by 2027, up from the expected 75 million this year. And that would make it one of the 5 biggest airports in the world. Well, joining me now is Mehmet Kalyoncu. He's board member of IGA Istanbul Airport. Mehmet, good to see you this morning. You opened a 3rd runway during the pandemic. You've now already got a 4th under construction.
Yes, it will be finished in 2 years.
Right. And what have been the challenges thus far?
Well, of course, COVID. But apart from challenges, actually we are now facing the competitive advantage of being the last airport before COVID. I can say being the last mega hub airport project before COVID, because after COVID, everything became more expensive. There is shortage in workforce, shortage in logistics, and shortage in materials. So doing something, building something is hardest than ever. So I can see that many mega airport projects are being delayed. They are postponing either expansion programs or greenfield investment programs. So we are having a share which we were not expecting to have this soon. And also the second advantage, because of timing, is that we are the first mega hub airport after the climate crisis. Now, many airports, even in Europe, are facing many challenges because of climate change and unordinary weather conditions. Our airport is world's biggest LEED gold building. So we have the most sustainable airport, the latest one, the newest one. So we didn't have the same problems that the older airports had.
You touched just now on competition. Do you regard your prime competition as the likes of Heathrow and Charles de Gaulle and Frankfurt, or is it these super hubs in the Middle East, Dubai and Abu Dhabi?
Of course, both geographies are our rivals, but we have something they don't have. We have Turkish Airlines, and we have the relationship with Turkish Airlines better than ever. Not British Airways with Heathrow, or not Lufthansa with Fraport. We are like very strong, but I think this is benefit for the other airlines also, because Turkish Airlines is the airline that is flying to most destinations, and the advantage that this is serving to other airlines that are increasing their network through flying to Istanbul, which we will see next week at Roots Istanbul conference. We will be hosting 3,000 delegates from 250 airlines, and it is going to be the busiest ever Roots conference in the world. And we are expecting to increase the airline agreement from 95 different airlines to 100 different airlines.
Does that mean you expect to catch up with the likes of Heathrow and Frankfurt in terms of connectivity in the near future?
I mean, Istanbul is more connected than Heathrow and Frankfurt. Do you mean?
I mean, in terms of the number of individual destinations that you can go to and from there right now.
Istanbul has more destinations than them already. So it is the most connected airport, is connecting to 60 capitals and 250 cities in 3 hours. It is a geographical advantage, but what we have faced is we use this geographical advantage with the advantage of timing. As I said, first airport after climate crisis, last airport before COVID crisis. That time frame, I think 5 to 15 year time frame, we were the only ones that built such a mega hub airport.
Now, Mr. Samsunlu, who was your chief executive for the last 6 years, has just stepped down. When do you expect to appoint a permanent successor for him?
Before the end of this year.
Very good. Mehmet, good to see you this morning. Thanks very much indeed for joining me.
Thank you so much.
Still to come here on Business Live, we'll have a look at how the markets are doing this Friday morning. Don't go away.
Mandatory evacuation, you must leave!
For many people, Harvey is far from over. Christchurch has been changed forever by what happened here.
There was a river of blood coming out of the mosque. That's a scene that you don't forget.
Ida has certainly left its mark on New Orleans.
It just feels heartbreaking.
We help you understand the world with us. We are standing on the supply line right into the heart of America's opioid crisis. I've reported from around the world and around the UK.
Are you trying to run me over, Sir Philip?
No, go away.
Look like it, sir. Will you respond to those who've made accusations, Sir Philip?
Can you go away?
Joe Biden knows the celebrations are over, and this is a country in crisis.
You don't want to be remembered this way. You always want to be remembered as something positive.
It is almost impossible to predict where these fires will go next. This gives you an idea of the strength of those winds, strong enough to bend and twist metal.
Do you regret the tweet, Gary?
There's no sign, publicly at least, of either side being willing to give ground.
How do you reassure the public that all of these mistakes wouldn't be made again?
I'm Greg Milam, and I'm Sky's Chief North of England correspondent.
Fly Emirates. Fly better. Fly Emirates. Fly better. Thank you.
Welcome back. Now, last night's sell-off on Wall Street was followed by mixed trade overnight for stocks in the Asia-Pacific region. I think I can show you what's been going on. You can ignore the figure for Shanghai in the bottom left-hand corner of the screen there. Shanghai remains closed for the Golden Week holiday. The Nikkei, the main notable faller in the region. The Indian market, which isn't on the screen, rose after the Reserve Bank of India kept interest rates on hold. In Europe, stocks are going into the weekend in largely positive territory. Here's the current picture. There are some fallers to mention, though. Talking points include the healthcare technology firm Philips, whose chief executive, you recall, was on the programme this time last week. Its shares are down 8% in Amsterdam after the US healthcare watchdog said it was unsatisfied with the status of a major product recall. Well, here in London, the FTSE 100 is also in positive territory right now, up 0.5%, led by the financials and, in particular, the insurers. And that's largely on the back of press reports on possible takeover interest in Aviva, which is up nearly 8.5%. Well, Legal & General and Prudential are up in sympathy with Aviva, as you can see there. Big jump in Legal & General there as well, as are the asset managers, Phoenix and M&G. To the downside, Halion is off by some 1%. You recall on our afternoon programme yesterday, we reported that GSK had sold £885 million worth of shares, so Halion slightly depressed after that this morning. Outside the FTSE 100, Metro Bank, the shares, look at that, they're up nearly 19% now. They obviously sold off by 28% yesterday. A lot of rumour and speculation going on around the possible capital raising there. Elsewhere outside the FTSE, the banknote printer De La Rue has got a trading update out today and the share price is ahead by some 4%. On the foreign exchange markets, well, all eyes later on will be on the US non-farm payrolls data at lunchtime. In the meantime, sterling's up 1/6% against the US dollar, more or less unchanged against the euro. The euro, I should say, by the way, is on course for a record 12th week of declines against the US dollar. So you can see it's slightly up today against the greenback. After 2 days of heavy falls, by the way, the oil price is a little bit calmer this morning, but it still looks set to finish down by some 10% on the week. A barrel of Brent crude will currently set you back $84.35 a barrel, up 1/3 Well, joining me this morning is Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Sophie, good to see you today. Non-farm payrolls, the big data release of the month. What are we looking for?
Yes, absolutely. So this is obviously the data set that's going to show us how the labour market is shaping up over in the US. Now, broadly speaking, the market is expecting to show that fewer jobs were added last month than the previous month. And essentially what markets are looking for, you referenced the bit of unsteady trading in the US, is we are looking for the economy to have continued to cool down in that space because, of course, we are looking for the Federal Reserve to be able to stick to the playbook that heat is coming out of the economy and that therefore interest rates aren't going to need to be hiked again just yet. So that's also kind of, leaning into the FTSE's behaviour a little bit today as well. But certainly, as you say, the very big one to watch so far this week. Obviously, earlier in the week, there's a lot of turbulence in government bond markets, both in US treasuries, gilts here, bunds in Germany. Could an unexpected number here rekindle some of that? It's been much calmer the last 48 hours. It has been calmer in the last 48 hours, but I do still think, broadly speaking, the uncertainty, unfortunately, is still, hate saying this, it is the ultimate buzzword. And I think really that higher for longer interest rate narrative isn't going anywhere. And actually that is what's feeding into yields doing what they're doing at the moment. So I do think there's a potential for a bit of a move, but I think for me that volatility is probably still lurking around the corner. Yeah, I mean, the interconnectedness of all this is quite fascinating, isn't it? Because obviously the sell-off in treasuries
bizarrely has led to some people going into the dollar because they're looking for yield. And, of course, the dollar impacts on the oil price, which has had a really turbulent week.
Yeah, of course. I mean, the oil price really has been, I feel like I've been talking about this non-stop for the last couple of months. And the oil price is seeing enormous spikes in both directions. This week we're looking at 8% increases at least overall for the week. And that is despite the fact that we've seen really significant supply constraints. We're losing about 1.3 million barrels a day from those Saudi Arabian and Russian supply cuts. But the outlook for the economy and demand there is looking quite shaky. So that is squeezing the price upwards. So, yeah, as you say, very volatile, unfortunately, which is obviously hard for the inflation picture.
Yeah, it kind of feels for me like there's a bit of a floor on the oil price. Every time it goes below sort of $90 a barrel, it's going to tick back up again before too long. Yeah,
I think you're absolutely right. Unfortunately, that is the world that we're living in at the moment. It's certainly not playing by the usual rule books. And there's a lot of, I hate this word, we've used it a lot today, but a lot of volatility and uncertainty there. And I think absolutely that kind of psychologically important $80-ish a barrel benchmark is where we do start to then see a lot of movement.
Yeah. Now, what about individual features today? One of the standouts is JD Wetherspoon. Really rough few years due to COVID lockdowns, but feels like it's got its mojo back.
It has indeed. So Wetherspoons has come out today, obviously pub favourite in the UK, and it's recorded its first profit since the pandemic. So really huge progress there. But unfortunately, the shares are off. Last time I looked, it was about 4% today, and that's because the outlook is still very cautious. So as much as they've benefited from the cost of living crisis, they're more of that kind of value option. Like-for-like sales have gone up nearly 13%. Things are looking good, but the outlook is cautious, and that is largely because, as we say, the cost of living for people, that problem, that conversation isn't going anywhere. And actually that discretionary spend for pubs means that they're finding it really difficult to map demand properly.
Those like-for-like, so 13% is pretty impressive. I mean, presumably most of that is volume because they are a value player. They'll have kept the lid on prices where they can.
Absolutely. They simply can't hike prices to the same degree as other names because they know their core demographic is going to be a lot more price sensitive. So that is certainly something they've had to keep in mind. But unfortunately, the other kind of element to that is that there's nowhere for their customers to go. They are kind of the bottom of the value chain when you come to value for money. So as those customers, if they start to drop off, there's no one really topping up the other end of the funnel. So it's a lot of moving parts for them, for sure.
All right, Sophie, great to see you as ever. Thanks for joining me. That's it from me. I'm going to be back at 4:30 this afternoon with our afternoon edition of Business Live. Hope very much to see you then. In the meantime, do stay tuned. Coming up after this short break, it's Sam Washington. See you later. Cheerio.